Hi, everybody. This is Paul Gerard. I'm a student loan consultant working with the American Podiatric Medical Association and the Young Physicians Institute. This is module number 4 on federal consolidation. Now, in theory, federal consolidation is really quite simple. It's trading debt for debt. In this case, it's paying off multiple federal loans with one new federal loan. By the way, private loans cannot be consolidated into a federal consolidation loan program. We think you'll find that many recent podiatric medical school graduates are not really strong candidates for federal consolidation. The information in this module hopefully will confirm that for you. If you do decide, though, that you want to do federal consolidation, there's only one option, and that's with the federal government's direct consolidation loan program. The online application is at studentloans.gov, and you can actually upload your NSLDS record directly into the direct consolidation loan application. Now, very important to remember, and you'll see this if you see our tips on consolidation on our homepage, if you decide to do federal consolidation, you're not choosing who you do it with. Once again, your only option is with the federal government's direct consolidation loan program, but you can choose the loan servicer for your new federal direct consolidation loan. So who would benefit from federal consolidation and who really shouldn't do it? Let's take a look at the advantages and disadvantages of federal consolidation. In terms of advantages, if you happen to have multiple loan servicers and you consolidate, well, you'll end up with one loan. And if you only have one loan, you're going to have the convenience of one loan servicer. We think you'll find that many of you already have one loan servicer. But again, it's not an issue of multiple loans. If you have multiple loan servicers, by consolidating, you can have the convenience of one loan servicer because you just have one loan. Also, if you have any older non-direct federal loans, by consolidating, you can convert the balance of a non-direct loan into a direct loan balance. And there are basically two reasons you might want to do this. First of all, as you will note from the module on public service loan forgiveness, only direct loans are eligible for forgiveness through the public service loan forgiveness program. So if that's part of your repayment strategy, you probably want all of your federal loans to qualify. So by consolidating, you can convert or flip the balance of a non-direct loan into the direct loan program. Another reason you might want to do that is only direct loans can be repaid with the two newest repayment plans, pay-as-you-earn known as Pay and revised pay-as-you-earn known as Repay. So once again, if you have some non-direct loans, one advantage to federal consolidation is that it converts the balance of those non-direct loans into a direct loan balance. Also, the maximum repayment term for unconsolidated loans is 25 years. And if for some reason you need to extend the repayment 5 years, you can do that through federal consolidation. So these are some of the advantages of federal consolidation. But what about the disadvantages of federal consolidation? Well, one important disadvantage is that federal consolidation partially negates what we call aggressive repayment. Well, what do we mean by that? You can always overpay a federal consolidation loan early with no penalty, but you only have one loan at one interest rate. If you don't consolidate and at some point you start to aggressively pay over and above the minimum payment amount of whatever repayment plan you're in, you can work with your loan servicer to target the additional payment against your worst loan because you have different loans in your portfolio. So that's why we say by consolidating, you partially negate aggressive repayment. You can still overpay, you just don't get quite the best bang for your buck because you only have one loan at one rate. Speaking of interest rates, you get a slightly higher interest rate when you consolidate. You get a weighted or blended rate of all the loans you're consolidating, rounded up to the nearest higher 1/8%, but that's only 0.125%, and then it's fixed for the life of the loan. I've never had anyone not consolidate because the rate is too high, but you do need to know that it's a slightly higher rate. If you consolidate too early, you'll lose your grace period. And if you have any federal Perkins loans, those are subsidized loans. And when you consolidate them into the direct consolidation loan program, they become unsubsidized, or their balance becomes an unsubsidized balance. So these are some of the disadvantages of federal consolidation. So are you a candidate for federal consolidation? Should you consolidate your loans into the federal direct consolidation loan program? Well, we're going to take the information from the previous two slides and restate it in a different format here. You may be a candidate if you have multiple loan servicers. Notice again, we did not say multiple loans, multiple loan servicers. You may also be a candidate for federal consolidation if you have some non-direct federal loans and you're interested in repaying your balance with pay-as-you-earn, known as pay, or revised pay-as-you-earn, known as repay. Those two repayment plans are only good on direct loans. You may also be interested in federal consolidation if you have some non-direct federal loans and you're interested in the Public Service Loan Forgiveness Program, because PSLF only applies to direct loans. You may also be a candidate for federal consolidation if you need to extend the repayment term out 5 years to 30 years. But you may not be a candidate if you already have one loan servicer, because many of the loan servicers have what is called combined or single billing, where you make one payment and they spread it proportionately against all the loans they service. You may also not be a candidate if your entire portfolio is already in the direct loan program. And finally, you may not be a candidate if you are interested in aggressive repayment and you want to target additional payments on your most expensive loan. We hope the information in this short module will help you know whether or not you are a candidate for federal consolidation. This is the end of module number 4.